Ben ritrovati giovedì mattina su floor del New York Stock Exchange. In questo momento indici contrastati, lo Standard & Poor's 500 ha aperto questa mattina in territorio negativo, la quarta seduta consecutiva di ribassi almeno fino a questo momento. Parliamo della giornata di oggi con la mia ospite qui su floor, come ogni giovedì, è Doreen Mogavero, che è fondatrice, presidente e amministratore delegato del floor broker Mogavero Lee Co. Doreen, thank you so much for being with us again.
Thank you. Appreciate it.
So Doreen, Federal Reserve yesterday, ECB today. We had huge expectations from this week from the central banks, and nothing happened.
Well, I'm not sure we had huge expectations. I think most traders did not really think that they were going to come up with this grand plan by today. I don't think. I mean, I think last week's rally was what everybody's sort of focusing on in thinking that those were the expectations. But I think, in fact, it was a reaction to the fact that the ECB was willing to do something, and people just were really covering shorts, I think, for the most part, and maybe going a little bit long, but short-term strategies. That rally of the last week was not huge investing coming in with this great bit of confidence. It was still a matter of short-term trading. So I think the expectations were much lower than maybe you thought they were. I don't think we expected the Fed to really do anything either. I mean, we talked about this last week. I was hoping they would not, and I'm glad they didn't. And in a way, that's really a good signal. That means that they don't feel they need to get in there yet, which is good, because maybe the housing numbers changed their mind a little bit. And so I think that the Fed is probably okay. ECB, I don't think anybody really expected a grand plan by today.
Yeah, well, we had a very negative reaction in Europe. The European indexes after, Mario Draghi press conference. We had an initial bad reaction here, but as I was saying, now indexes are mixed, so this will confirm what you just said. The expectations were probably already very low, and the market is not that disappointed.
No, I don't think they are. I think that maybe ECB should have had a plan before they made the announcement. It might have been, that would have raised the expectations if people really thought that they had something on the table for in the short term, but I don't think we did. I don't think anybody really thought that. But in any event, I think it's good news that everybody's on board should they need to be, and that they're working hard, and I think that's encouraging to the markets. But unfortunately, I think time is not in anybody's favor. These things are taking way too long to come to fruition, and I think that's really the problem. We haven't got enough momentum going to keep any sort of sustainable rally here. To be going on hope is great, but it's not really a sustainable model.
How long you can go, on hope?
Yeah. So we got to see something.
And talking about inside the economy, we are really waiting for the numbers tomorrow, the unemployment numbers. The Federal Reserve would have two job reports before the next meeting, so we will see what if that will change their mind. We had some anticipation from the Philly Fed, a few weeks ago. That will just already tell us that the numbers are not going to be that great. This morning, though, the unemployment benefits, the requests, they were not as bad. The claims they were not as bad as people thought.
Well, I mean, I think the numbers were small, even in the right direction. So I don't know that that's particularly telling for anything. I mean, I think we have to really see significant moves. Kind of rule of thumb is a bigger number than that. Much 6,000 is not really. I mean, it's important to the 6,000 people, obviously, but beyond that, it's not significant in terms of a trend being formed. So I think to that end, you see what we have again, sideways. After all of the news, and don't forget, markets are much more volatile because they're much more electronic. So I think that's something you have to keep in mind. These moves that are very exaggerated are exaggerated because, first of all, there's a lack of participation from a robust field of investors. It's really more professionals, and it's very electronic, so that tends to make it worse or better.
Yeah, and the problem is because it's electronics, it's already, we already talked about that. We had in 2010 the flash crash, then we have Facebook and NASDAQ, and yesterday we had a very critical day here at the stock exchange. We always talk about very bad volumes. Yesterday we had amazing volumes in the first couple of hours, and that will just, probably was the alarm that something wasn't right. We already know by now what happened. Knight Capital, a huge loss for the company.
Mm-hmm. Well, I think, first of all, any of the markets like the New York Stock Exchange that have people on it, there's really a tacit knowledge. There's an intuitive feeling that you have just from having been here for all these years that something's wrong, and everyone on this floor knew instantaneously, and I literally mean within seconds, that something was wrong. And
Volumes, right? I guess it was one of the signals.
well, volumes have to, sort of accrue and then get posted, but we knew instinctively from being in the stocks that they don't trade that way, that something was wrong. Something was wrong. I mean, I wouldn't tell you we necessarily knew exactly what was wrong, whether it was a program problem or whether it was news event of some kind, but we knew something was wrong. And because the people are here at the point of sale, which is critical, we were able to mitigate the problem. And I think the exchange, the specialists or the market makers and the brokers all really worked immediately to do the best they could to mitigate whatever problems were going on. So I think to that end, people should really feel very confident in the markets that have people in them, because the people really make the difference. I said yesterday, anybody can do it when it's easy. It's when it's difficult that you really need to see, who's really got the juice. And I think we proved yesterday that we do. So,
Well, especially we haven't seen any big impact on indexes. We only saw the impact on few shares, and the communication has been pretty immediate.
oh, I think so. I mean, yesterday, I will tell you within, I would say, less than 30 seconds of the first real move up in those stocks, the New York Stock Exchange was already around looking. We were already putting on, making sure that trades were where they should be, and already set into mode, finding out what was going to happen. So I think that really mitigated the problem. I mean, it could have been much worse. We stopped trading in some stocks, and all of our levels in which we cut off trading would kick in. So we have a lot of stop gaps.
And we have also heard the comments from the CEO, a lot of, the very good transparency from the company. Of course, they haven't denied what happened, and they actually reinforced which were the problems, and they were pretty candid about the loss. It's a huge loss, and in this market environment, it could be very critical.
Well, I think, technology, we've become so dependent on technology. You can't say that, again, I say, there for the grace of God go I. Everybody's technology is probably susceptible to some sort of a glitch at some point in time. So I think that's the key to the success of the New York Stock Exchange model, is that, well, first of all, we test and test and test and test and test. I don't work for the exchange, but I can tell you from being here all these years that the model that we have here, our technology is, we think, as stable probably as it could possibly be. But again, there's people here to mitigate if something should happen. I think that's the key, and I think hopefully I think that was what saved Knight as well. I think that someone must have recognized there was a problem and immediately acted on it. So to that point, you have to give them credit.
Well, the investors knew what was going on. I mean, it's not in other cases that we went on for days without knowing.
And in a market structure where all of this technology is necessary to operate, I mean, I think to some degree you have to expect things are going to happen on occasion. I mean, you do the best you can, right?
It's too late to go back and to forget about technology. So, of course, we have to cope with it.
I mean, we need technology in many ways. It increases capacity. It also helps to increase transparency and a lot of different things. There are a lot of good things about it, but we definitely need people. Maybe we need more people watching the switch, but we definitely need the technology as well. So I think finding the balance. The New York Stock Exchange is what I can speak about. It's what I know. I think we found a very good balance between the technology and the people, and I think that's what makes the difference at the end. And as an American citizen, a person that works here, I'm very happy to see that our financial markets have the people on the floor of the New York Stock Exchange to be at that switch and to monitor it. So
that's true. Thank you very much.
Not confidence eroding, confidence building.
Okay, hopefully, we will forget about this.
Well, you don't have to forget about it, but you can learn from it.
Thank you, Doreen, for being with us.
You're welcome. Thank you.
E grazie a voi per l'attenzione, a domani.